I'm John Hanna for CDTV.net, and we have Greg Womack, the President of Womack Investment Advisors. Thanks for joining us, sir.
Well, John, it's great to be here.
How are you doing this
Monday? It's great to be here, not there, here in Oklahoma.
There you go.
I'm glad to be here with you on the phone today.
Yes, sir. The beauty of technology, right?
I tell you what, Alexander Graham Bell, we love you, man.
There you go. What's up with the market on this fine Monday? Well, kind of like a gray here in New York City, gray Monday morning.
Well, yeah, I guess you guys need to let the sunshine poke through because it's definitely affecting the markets right now. The markets are off a little bit today, around 1% across the board, and of course, oil and commodities are weaker as well. I guess a lot of it, John, is just the news we're getting in Greece. Here again, it's Europe that's kind of causing the issue, and of course the commodity issue is China. The slowdown in China, although not as fast as some might thought, it is slowing some. And so for a change, though, last week the small cap Russell 2000 and the Nasdaq actually suffered the least. They both have lost more than 6% since their late March high. You just have uncertainty about the future of the Eurozone. The financial compact helped push the yield on the 10-year U.S. Treasury note to levels it hasn't seen since January. So the 10-year last week was 1.9%. Now it's 1.84%. So people are fleeing more into fixed income, into bonds. Meanwhile, oil prices continue to sink to $95 a barrel or toward that level, while gold plunged below $1,600 an ounce last week. So year to date, the Dow Jones is up 4.94%, Nasdaq up 12.6%, and the S&P 7.6%. And like I said, as of the 14th of May, around 11:30 Eastern Time, the markets are off around 1% across the board on most of the indices. Here again, let's talk about some headlines, John. Neither far right nor far left parties who gained power in Greece's recent elections because of the opposition to austerity measures imposed by the country's European partners, neither party was really able to form a coalition government. As a result, the Eurozone's bailout fund held back the European $1 billion aid package due last Thursday, though it agreed to pay out $4.2 billion so Greece could meet immediate obligations. So the situation really increased the uncertainty about Greece's future in the Eurozone. If no coalition government is formed, or if a new government rejects budget cuts needed to meet Eurozone guidelines. I was reading one report today. There's about of the four foreign exchange traders, about 70% of them think that Greece will eventually leave the Eurozone. Then we have Bankia, which is one of Spain's largest banks, suffered from bad loans made to real estate developers. They're going to receive a bailout from the Spanish government, much like the U.S. banks did the '08 crisis. So the government said it would take a 45% stake in the bank as part of its efforts to overhaul the country's overall banking system. So Spain continues to have problems, as I mentioned, Greece, now Spain. And then back here at home, the Federal Reserve says the use of consumer credit increased. So people are spending more money, increased 7.8% almost in the first quarter of the year. Most of that increase was non-revolving debt, such as loans for autos, education, boats, mobile homes. Wholesale prices, we've got a little bit of news on that. The inflation front fell 0.2% in April, making the seventh straight month in which price increases have slowed. And so the year-over-year wholesale inflation is 1.9%. So that will could probably continue to be benign, at least while we're seeing this weakness in commodity prices. That's helping push it down as well. So strong. We had a strong U.S. exports in March that couldn't keep up with higher oil costs and imports of Chinese goods. So according to a Bureau of Economic Analysis, the trade deficit saw a dramatic 14.1% increase in March as exports rose nearly 3% while imports were up more than 5%. And the Treasury Department said a combination of higher tax receipts and less spending on Medicare, education, and defense led to the federal government's first monthly budget surplus in September of 2008. Nevertheless, the U.S. Treasury still projects an annual deficit this fiscal year of more than $1 trillion. Now, the big news, too, toward the end of the week was J.P. Morgan Chase announced that trading credit derivatives that were intended to hedge the bank's investment risk had cost it roughly $2 billion in paper losses. So expect more news in the future about investigations and perhaps even more losses to uncover as they continue to dig deeper down this little rabbit hole. John, as we look ahead of this week, Greece's struggles to form a government will continue to command attention. A new election will be scheduled for June if no agreement is reached. Also on tap is scheduled Tuesday's meeting between newly elected French President Francois Hollande and German Chancellor Angela Merkel. European growth data is due Tuesday, while manufacturing and retail sales data through the week suggests the state of the U.S. economy. So pretty intense week as far as reports and data coming out. We have, on the 15th, we have consumer inflation, retail sales, international capital flows, business inventories, the Empire State Manufacturing Survey. So pretty busy Tuesday. Then we have Wednesday, we have the Federal Open Market Committee minutes, housing starts, industrial production. And then Thursday, we have the Philadelphia Fed Manufacturing Survey. And then Friday, options expiration. So pretty interesting week. Here again, a lot of stuff going on from the banking sector to the commodity sector to Europe and Greece and China. I mean, just never a dull moment.
There you go. That's Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. And I'm John Hanna for CDTV.net.